Here we'll go beyond chart and price action to monitor the underlying on-chain data that allows us to see the real-time supply and demand economics of the BTC network, so you can understand what participants, including whales and institutions, are actually doing with their Bitcoin to give you a real edge in the market. Today we're going to be looking at how you can master on-chain data. Now, first and foremost, what is BTC on-chain data? Well, Bitcoin is unique in the fact that we can track the network utilization, transactions, and everything in relation to BTC in real time. So just as a visual example, here I can see the BTC unconfirmed transactions coming in. This is every single Bitcoin transaction happening right now, and that has ever happened throughout history, that we can monitor and check in real time. So just as an example, we can check this BTC's transaction. We can see the amount being sent, the fee being paid, and the address it's going from and to. Now, what we can do is use all of this data in a very unique way. We can use this to gain insights into investor habits, trader psychology, and a whole host of other data points to improve our BTC investing and analysis. Whether you're not someone that wants to actively buy and trade Bitcoin semi-frequently, this is still very useful to help whether you're DCAing or just using BTC in your business. So first and foremost, we'll look at the realized price. Now, this is the average accumulation or cost basis of all BTC on the network. So what this is looking at is once we sum together every single BTC transaction and the USD value it was last transacted at, and we aggregate all of that data together, it tells us this cost basis or average accumulation. So if I just zoom in on price here, we can see that typically this is beneath the BTC price, typically because most people have bought BTC historically, and this is an asset that's gone from a few cents to over $100,000. But if we just zoom back out here, what we can see is this really outlines periods when most investors are at a loss on their position, and we can buy blood in the streets in real time. When this black line, which is the BTC price, dips beneath this realized price, a majority of traders are at a loss on their position. And when this far surpasses this realized price, indicates that a huge amount of traders are actually holding on to huge amounts of potential profits on their BTC. But we can take this a step further. What we can do is look at the ratio between these two data points, the price and the realized price. And once we standardize that data, we get the MVRV Z-score, one of the most popular metrics we have here on BitcoinMagazinePro.com. Now, what this does is very clearly presents periods where Bitcoin may be overvalued, a little bit overbought, and overextended to the upside when this orange line, this Z-score, reaches these upper red regions. And the same is true for the downside. Once Bitcoin reaches these green accumulation zones, it typically indicates that we're a little bit of a discount. And this can be seen just by looking at the realized price and underlying price of BTC. Once we dip beneath, like we said, it's buying blood in the streets. This is a great time to be a contrarian when everyone's fearful, to accumulate some BTC at a discount. And the same is true if you are looking to take some profit on your positions. Once everyone's at a substantial multiple on their holdings, this is usually a good time to consider scaling out. Now, what we can do is actually modify the data we're looking at and collecting when calculating this realized price. So here we can actually just look at new market participants. So this is the short-term holder realized price. Now, this is classifying new market participants of those that have entered BTC within the last 155 days. And just for clarification on this chart or any other metrics we have on BitcoinMagazinePro.com, you can just scroll beneath the chart and it gives you a whole host of information here and some related resources so you can do some further analysis yourself. But what we can see is if we just zoom in over the past few cycles, this metric typically acts as a moving level of support and resistance for BTC. What we can see is during bull cycles, usually when we get to the average accumulation or cost basis of new market participants, this is where new buy pressure comes in to actually rally price higher. And the same is true during bear cycles when BTC is having these long drawn out periods of negative price action. This actually typically acts as a resistance point. Usually when investors get back to a break even on their position, it's usually when we're about to experience further downside price action. What we can see is as we're moving up now, this is considerably closer than the standard realized price, as like we said, this is just taking into account new market participants. So this gives us some great insight into how much new investors are paying for their BTC, and potentially if they're paying considerably more than older and more experienced market participants. And another metric we can look at to potentially see new market participants and retail capital flowing into the markets is just by looking at the amount of BTC each wallet is holding. What we can see here on the addresses holding chart, we can see every address holding at least 0.01 BTC or 100th of a Bitcoin, a 10th of a Bitcoin, or at least 1 BTC. Now, a lot of people don't really realize you can earn a fraction of a Bitcoin. You can earn 100 millionth of a BTC, known as a Satoshi. What we can see here is the general trend of adoption for BTC. As these are typically over multiple years trending to the upside, it indicates that more people are using Bitcoin, buying Bitcoin, holding Bitcoin. So this allows us to check the adoption in real time, not just of participants with smaller funds, typically those with just a few hundred or a few $1,000s, but even those with substantial amounts of funds. Here we can see those holding at least 1 BTC, which is around 1 million unique wallets. But we can track wallets of 10, 100, even 1,000 BTC once you get more up to speed with on-chain data and analysis. But what we can do is just take any one of these individually to see the trend in a bit more detail. So here, this is the addresses holding at least 1 BTC. And like we can see, this is hovering around 1 million unique wallets, but this typically moves alongside price action. So we can see here, as Bitcoin's price is appreciating, typically people are buying, they want to hold more BTC. Although when price is decreasing, we typically see those holders maybe begin offloading their BTC, maybe out of fear of the market potentially decreasing further. But this is still an interesting metric to watch to check the adoption levels of BTC. And another way we can really check the investor habits and psychology in the markets is not by just checking how much BTC is being held, but by how long it has been held for. So this is the 1-year HODL wave. Now what we can do is track the percentage of BTC that hasn't moved in a specified amount of time, in this example 1 year. And from this, what we can see is the typical trends and cyclical nature of the percentage of market participants holding their BTC. What we can see is an inverse correlation here. Typically when Bitcoin's price is rallying, we see the percentage of BTC that has been held for at least 1 year actually decreasing. This is due to the fact that new market participants are entering the space, so the percentage of people that have been in the space just for a few days or weeks increases quite rapidly. And alongside that, we do typically see long-term holders potentially begin offloading their BTC as prices rally considerably higher, which makes sense if you bought BTC at just a few dollars and now price is $100,000, it might be worth taking a little bit of profit on your position. But like I said, this is just one example with the 1-year HODL wave. We can go a step further with this and look at the total HODL waves. So here we can see in a very colorful format the different HODL waves, but classified by age bands. So we can see on the key down here, we can isolate to look at BTC that has been held by wallets for at least 10 years, 7 to 10 years, 5 to 7, etc. And this allows us to really isolate a particular type of investor or trader. So what I like to do with the metrics such as this one is remove all of them apart from the new market participants. So if I remove all of them up to say 1 to 3 months, so 3 months and below market participants, we can see the percentage that they make up of the market typically spikes very rapidly towards market cycle peaks, which gives us an indication that retail are FOMOing in and we may be getting a little bit overheated in the market. The same is true for the downside. If we're seeing very low levels of new market participants, boring price action, Bitcoin isn't in the news anymore, and a huge percentage of the BTC is being held by investors who have a long time frame horizon, happy to hold for 1, 2, even 5+ years, then this is typically an area where BTC may be a good opportunity to accumulate with a good risk to reward. So this is the Bitcoin HODL waves. Now, as a couple more final, more advanced metrics, we can look to something like the supply adjusted coin days destroyed. Now, to calculate the supply adjusted coin days destroyed, first we need the coin days destroyed. So very simply, this is tracking almost the velocity of BTC. For example, if I held 1 BTC for 100 days before transferring it, then I would add 100 coin days destroyed to the network. Now, the same is true if I held 0.1 BTC for 1,000 days. As I'm holding 10 times less BTC, I would have to hold the BTC for 10 times more to have the same impact on this metric. Now, this is the supply adjusted. So what we do is once we aggregate every coin days destroyed for a certain day, what we do is then just standardize that data by dividing the coin days destroyed by the circulating supply of BTC. Now, this allows us to see the transactions that are happening from large and long-term, more experienced BTC holders. The major influences on this metric are those whales that probably bought BTC a huge amount of time ago for a very cheap price and are holding considerable amounts. So when they transfer their BTC, they typically have a big influence on the market. Compared to new market participants who may be just putting a few hundred or a few $1,000s in for a short-term trade, those who have held BTC for an incredibly long period of time typically have a lot of experience and can time the markets considerably better than most participants. So what we can see is when this metric spikes to the upside, it indicates a huge amount of whale activity, these big BTC holders. And they typically know when to sell. They typically take action at BTC peaks, although we do often see some activity towards BTC lows as well, as we may see some OTC, some over-the-counter transfers of Bitcoin from whale to whale or some aggregation of wallets. So this is a great one to watch as well for helping to see when the market may be getting a little bit overheated. And alongside that, one of my favorite metrics is the spent output profit ratio. What we can do is track the UTXOs, or the unspent transaction outputs, of every BTC transaction. So if that sounds complicated, don't worry. What we can do is every time a BTC is transferred, we can assign a US dollar valuation to that transaction. And then the next time it is transferred, we can see how much that USD valuation increased or decreased. So typically when we see people moving BTC on chain at a considerably higher price than what they last transferred it at, potentially to sell BTC, this indicates a huge amount of realized profit in that transaction. And what we can do is look at this profit ratio, the total amount of profit realized on a day-by-day basis and the total amount of losses realized, to get the spent output profit ratio. And really interesting to see, as you'll see with a lot of on-chain data, is people are typically doing the wrong thing at the wrong time. We usually see a lot of people realizing losses towards bear cycle lows. And while we do see people begin taking profit at bull cycle peaks, which does make sense, this is also when retail tend to flood in. All on-chain data is really showing us is the mass psychology of investors, just quantified and visualized. So this is a great metric, especially towards bear cycle lows, to see when people are capitulating in real time, like we've said multiple times, buying when there's blood in the streets. And again, when we see a huge amount of realized profits, even if you're seeing sentiment on social media and other platforms really positive and really bullish, you really need to focus on the underlying data to see the actual health of the network. And once we look at all of these data points in unison for Confluence, it really gives us a good X-ray vision of how BTC is doing and what's likely to occur over the coming days, weeks, and months. So just to summarize, on-chain Bitcoin data allows us to see the real-time activity happening on the network, providing unique insights into the supply and demand dynamics of Bitcoin. And by quantifying and tracking the mass psychology of market participants, we can find patterns in investor habits and take action to accumulate at the highest risk-to-reward moments and even scale out with the highest probability of profitability. Like we could see from metrics such as the MVRV Z-score, you can see here, the spent output profit ratio, even the HODL waves. When we see multiple indications that markets getting overheated or potentially undervalued, it really typically aligns with a great period of time to take action. And having an unbiased and data-driven approach such as this one has historically outperformed a vast majority of holders. But do remember that on-chain data is only one perspective that we should use as Confluence in our BTC analysis. On Bitcoin Magazine Pro, we don't only provide on-chain data, but market cycle, derivative, macro, portfolio tools, etc. So you can take a full unbiased view of the market from multiple different perspectives, come to your own conclusions on what action you should be taking. Hopefully this video helped you to better understand Bitcoin on-chain analysis. And as well as all of the metrics we covered today, don't forget we have over 150 live chats on bitcoinmagazinepro.com for you to use and help to improve your Bitcoin investing and analysis. And if you'd like any further clarification on any of these videos, then please follow us on Twitter and check out our YouTube channel, where we try and provide very frequent insights and analysis, as well as educational content to help you better understand and prevent paralysis by analysis when it comes to BTC. We try and cut through the noise to just provide the data that really matters. Thank you all very much for watching, and I'll see you in the next one.